Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is our Chaikin Power Feed video series, and on a weekly basis, we kind of highlight one article where we talked about it, obviously in print, and go into the blog and kind of take a look at the article. And this one's about Joann stores, and we talk about sort of how the power gauge in this particular article sort of was never fooled from the get-go. As a matter of fact, when Joann stores, if you know the store, you know it as the arts and crafts store, sort of the fabric type store that is in a lot of the local area malls and strip malls, probably in your neighborhood, just like mine. There's one about less than a mile away from me here in Florida, which I don't know if that one is meeting its demise, but unfortunately, Joann's announced bankruptcy this month after being public for about 3 years, or so, almost to the day. March of 2021 is when it went public. And even from that particular point going forward, they had trouble raising money. They were supposed to raise about 186 million or more at the IPO, and they only came in at about a valuation of 130 million. So look, the store does revenues. The problem is they've accumulated debt over the years, and it's just not that favorable of a situation. But here's the thing that we really wanted to focus on. The power gauge was never fooled by this, and that's because it obviously looks at all of the metrics combined and tries to calibrate and recalibrate along the way as those things change. In our case, when the power gauge was looking at Joann store, it was never able to get to anything better than a neutral rating at any one point in time. But for the better part of an entire year, it's been bearish. Folks, I've never seen a more bearish chart like this one you're about to see now. Let's review the chart on Joann stores and kind of see where this all started and how it's ending. All right, folks, here we are at the chart of Joann Inc., symbol Joan. With the unfortunate news, obviously, this is sort of in the area of a bankruptcy. Now, a lot of things can happen in Chapter 11. I'm not exactly making a prediction. What I am doing is looking at the past and showing you how the power gauge looked at this particular name. And you should know, anytime a stock goes public, it takes about a year for us to formulate the entire rating. And so that gives the stock time to kind of sort of get its footing, have a few earnings under its belt, where it did actually beat a couple times. And things started to look positive somewhere around in 2022, early 2022. So we were talking almost 2 years ago, over 2 years ago, but it was so brief and the power gauge wasn't even calibrated at that particular point. But the first rating was neutral, quickly turned to bearish, neutral for a brief moment again, somewhere around the time frame of August of 2022. So not far after that February time frame. But since that time, it has really failed to even get close to outperforming the S&P. The money flow has been negative, and the power gauge stayed negative throughout this previous 52 weeks on this chart right here. You can see that's pretty obvious that this is a stock to avoid and has been for quite some time. Even if I open the power gauge and kind of look at the metrics, nothing really stands out. Obviously, you're going to see valuation metrics maybe getting a better rating, but from a technical standpoint, where this stands for relative strength and Chaikin money flow and price strength, it's been negative the whole way, folks. It's an unfortunate situation, but this does happen from time to time. And that's why having something like the power gauge on your side helps you to avoid mistakes. Even if you love Joann store, you walk in the store and you love what they do, you're not thinking about all of the debt that they've accumulated, some of the shipping costs that it takes to get all of that fabric from overseas and around the world and other countries that are putting it together for them. All of those costs have escalated, and they've gone into a situation where they just can't manage the business, and they had to file for bankruptcy. Okay, folks. So, take that as a learning moment, right? When you're walking in stores, look around, right? Look at the inventory that a store like a Joann's arts and crafts store might have to keep, and now multiply that by 800 stores around the country and do the math, right? It's nice to buy what you like and what you use and maybe invest in, I should say, but you really have to understand the metrics and really kind of look around. Are there lines out the door to get into Joann's? Not on the times that I've been there. Maybe there have been in other times. The point is the power gauge doesn't even know any of that. That's what the beauty of the system. What it's doing is looking at the metrics, what the company is generating off of what they're doing out there in the real world. The power gauge doesn't know that, but it wasn't fooled either way. It stayed bearish for most of its existence. And really in the past 52 weeks, one of the worst charts in the system that we have right now. Okay. Well, power gauge could help you avoid a name like that. And again, we'll be back on a video like this next week here on the Chaikin Power Feed video series. Again, I'm Pete Carmasino. I'll talk to you next week.